There seems to be quite a bit of interest in the natural gas market lately for good reason. So that's what we're going to focus on today. The liquefaction and the exportation of U.S. natural gas resources is obviously work in process. But in the meantime, however, the domestic natural gas glut continues. Further, news of a gas pipeline from Russia to China is being viewed as most traders, as future demand destruction for U.S. fracked gas. Of course, the weak fundamental landscape is being arguably and probably irrationally exaggerated by thin holiday trading volume. Nevertheless, we're not quite sure the liquidation in natural gas is over. In fact, despite today's bounce, we think we could get another round of selling that could bring us down to $2. Let's take a look at some of the reasons why we think that might be a possibility. Before we get started, just want to make sure everyone understands there's a substantial risk of loss in trading futures and options. Trading's not suitable for everybody, especially natural gas. So first thing we're going to look at is a weekly chart of natural gas futures. You can see the trend line support comes in around $2. Right now, nat gas is trading 30-40 cents higher than that, depending on which month you're looking at. And a lot of people are considering today's market as being oversold, and maybe today's bounce as being some sort of a bottom, and that could absolutely be the case. We're starting to get down. Anytime natural gas gets down from roughly $2.30 to $2, we call that a value area, meaning there's pretty good support in that general price range. That said, more often than not, natural gas tends to test those extreme levels, and in this case, we think that extreme level is $2. The reason we think this is there's seasonal weakness that normally continues throughout this time of year, and the COT chart doesn't necessarily look like the trend could be reversing. You'll also notice that if you look at this weekly chart in the RSI, the Relative Strength Index, the RSI is pointing lower, momentum is heading lower. We're not anywhere near oversold levels. If the price of natural gas gets to $2, we could be in oversold territory, but until then, that simply isn't the case. Also, take note, if you notice the boxes on the screen, those are previous November rallies. The market tends to rally in November and then fade and give that away later in the year. The seasonal low is generally in the late December area. So in 2016 and 2018, we saw rather large rallies. This year, the rally was tepid. It rallied for a couple weeks, but it was short-lived. We didn't even break above $3, and we're already on our way back down. In our view, that seems to suggest that anybody that's long this market will start to get discouraged, and they could look to continue liquidating. In other words, we could be getting some sort of a long squeeze. We also want to take a look at the seasonal chart for natural gas. I'm trying to pull it up here. Here we go. So the seasonal chart, this is just kind of showing you in a visual depiction of what I've been talking about. Natural gas prices actually tend to decline throughout most of the fall and winter. Most people are surprised at that, but the reality is the end users of natural gas generally purchase gas ahead of the winter season. So the demand comes early, and then as the market figures out that this isn't going to be an extraordinary winter, the price of natural gas generally tapers. Obviously, it's not that simple. We get storms, we get scares, weather scares, that sort of thing. So we do see some spikes, and generally in November through the December area, we get spikes, but they're generally short-lived, kind of like what we've seen this year. And again, we tend to see natural gas prices decline all the way into December. So with that in mind, we have a hard time thinking that the lows of natural gas are in. In fact, we probably have several dimes to go. And again, we're looking for about $2 is where we think prices could go. Another reason why we think that might be the case is large speculators are short natural gas. In fact, they're rather largely short, but they're not holding extreme shorts like we saw a few months ago. A few months ago, natural gas traders, or the large specs, were short over 200,000 contracts. Right now, they're only short about 140,000 contracts, which is a reasonably large position, but not extreme by any means. And so we're looking at this as The shorts, the bears, they still have some ammo. They still have some selling to do. And again, if we're right about that, $2 could be where we're going. Then again, we could be wrong. Keep in mind, natural gas is a trader's market. This is the type of market that you want to buy into large dips. You want to be a bull at discounted prices. That's really the best way to trade this market. Being short and on the wrong side of a move is something that could ruin somebody's trading career in a blink of an eye. So you generally don't want to be short natural gas this time of year, even though it normally goes down. What you want to do is look for buying opportunities. If you are already long, hedges are a good idea. If you're not long yet, keep anything in these price levels at a nibble with the idea of we could see $2 before everything's said and done. So again, we are DeCarly Trading. We are a futures and options brokerage firm. We'd love to hear from you if you're looking for a good broker. We offer everything from full service to discount online. Please send us an email, or you can chat right on our website. You can see there on the lower right. If you're interested in learning more, I've written multiple books. I highly recommend Higher Probability Commodity Trading for anybody that has a basic understanding of commodities already and is interested in learning about market analysis, some of the things that we talked about today, as well as putting a trading strategy together. We hope to hear from you soon.